In today's video lesson, I'm going to talk about the 7 ways to maximize your trading profits. Understand this. This is just some of the ways that I like to maximize my profit. All right, everybody. So the 7 ways to maximize your trading profits. Okay, so before we get rolling into this lesson, I just want to make an important, or at least point out something very important. This works for any market, okay? Doesn't matter if it's the commodities, the stock market, the foreign exchange market, or the cryptocurrency. These ways to maximize your profit will work in any market. I just wanted to point that out really quick. All right, so trading is all about making money, and one of the most important questions that I get asked is this: Jeff, how can I make more money by maximizing my profits? This is one of the single biggest questions, or the question I get asked the most is, hey, how can I maximize my profits? So again, I'm going to give you 7 ways. I'm going to give you 7 ways, but understand, these are not the only ways. These are just 7 of my favorite, all right? So number 1, get in early. Now, what do I mean by get in early, or not necessarily what I mean, but how do I get in early? And I put a couple things that I'm going to talk about. So number 1, the earlier you get into the trade, obviously, the more profit that you can make. And one of the ways that I like to do that are divergences, both bearish and bullish divergences. Another way is supply and demand zones. Okay, so we're going to go look at some charts right now, and we're going to look at divergences and supply and demand zones to see if this is going to help us get in early. Now, we're going to be looking back, so it's already happened, okay? Understand, too, future results, or basically whatever happened in the past, it doesn't necessarily have to happen in the future, but it happens more than often. So some of the ways I like to get in early are divergences. So let's go ahead and just look at the chart. Okay. Now, I'm just going to randomly pull up any chart, and let's see if we can spot some divergences to help us get in early. Okay, so, and again, it's not planned. I just grabbed it. So we're looking at PXD. That happened to be the one. Now, a couple things is I have different indicators on my chart, and these indicators can all give divergences, okay? But they don't always give divergences at the same time. So one of the indicators that I like to use the most when it comes to divergences are right here. This is the Forecast Pro, okay? The Forecast Pro is my indicator, and I use it every day to spot divergences. Remember, we're talking about getting in early. So, for example, in this particular case, you see how price was going down. So we had price going down, making lower lows, and then this indicator, I don't know if y'all can see it, but this indicator right here draws a line, and again, you can change the color of the line, I'm not going to get into that, but this dot, so it lets me know, hey, listen, there's a bullish divergence, and so in this particular case, it went up a little bit, rolled over, formed that double bottom, and then took off right back up to the resistance area, okay, or the supply zone. But I like to use those divergences. Now, the divergences can work both ways. We're talking about getting in early, so let's just go right over here. Let's say we're a counter trend trader. If you notice here, in this particular case, this divergence, we had basically, if you go by a close, kind of that equal high. So we could have got in early right there for a counter trend move. There's divergences all over the place. So here's another divergence, counter trend. Now, counter trends are a little bit more tricky, but hey, I have students that do counter trend trades, and the divergences are some of the best ways. Now, the TTM squeeze can give a divergence, plus the Ready Aim Fire Pro, which I do love that, can also get a divergence. So let me show you one right there, because again, we're talking about getting in early. So if you notice, remember, the bullish divergence on the Forecast Pro popped up here, came back and formed a double bottom, and then we got a divergence on the Ready Aim Fire Pro. So this divergence can help you get in early. Now, the Forecast Pro in this particular case spotted the divergence earlier, but you know what? Depending on what you're using, a divergence is a divergence. I mean, you might have got in a little bit later, but so what? It still popped it out. Also, look at this time frame where it was going down. You see the divergence here, and then bam, it raced to the upside. So we could have got in early right there, and there was no divergence there. So the next thing that I talked about was supply and demand zones. Let's just go back to the presentation and make sure that we got it. Let me move this over here. Y'all can't see, but I got it on the screen. Right here, supply and demand zone. So what am I talking about, and how can we use this to get in early? So supply and demand zone. So some of you might know these as support and resistance. Demand is support, supply is resistance. But one of the ways that I like to identify that is, let me just kind of back it out, is when we get a squeeze. If you notice right here, we got a squeeze, right? You see that squeeze? So then what you can do is when you get a squeeze, this is just the ways that I like to do it. Let me show you really quickly. And again, I've got my screens over, so I'm going to take a box. So what I like to do is when I get a squeeze, I like to draw the box right around it. I call this my contraction phase, when volatility is getting quiet, institutions are stepping away, but it's my contraction phase. It's actually phase 1 of phase 3 in the markets. And I want you to take a look at this. So you could have drawn this contraction box. And then what we like to do is we like to project a line right out that way from the box. And if you notice, price went up and pulled back right into that liquidity line. That's what I call it. Okay, it's in this particular case, it's a demand zone, but you know, again, I like to call it also a liquidity line. But that's a huge way, and I don't know if you guys actually do that, but let's go to another area. Let's go, and again, we're just looking at PXD. Let's draw a box around. Okay, so here was a squeeze. Here was a squeeze right kind of in this area. What I like to do is I like to look for the tightest areas. Okay, the tightest areas. Now, in this particular case, it's interesting because the squeeze fired. Now, I just used the squeeze as a guiding point. But what I'm trying to do is identify the contraction zones. Okay, now I teach my students how I like to draw them. But again, you can either just look at the squeeze and look for the contraction period. So you could have said, hey, here is, you know, the contraction zone at its tightest. You could even kind of move this up to right here. Let's say right here. And kind of project it out. So then what you could do, like in this particular case, since we're talking about getting in early, this was one of my squeeze zones. I could have drawn a line again right in the middle of that box. Okay, we call it the expansion area or line. So you draw the box, project the line out, and look at that. Price came right to the, so I could have set an order waiting right there. Also, this particular area, this is a liquidity line. Look at that, multiple touches. So when price broke down, you could say, hey, listen, if price comes back up into this area or the supply, then what I'll do is I'll get in right there, right? Maybe set a limit order. So you can see that when you draw these boxes, okay, these contraction zones, and I do it again based on the squeeze and then also the tightest area, project these lines, these liquidity lines and these expansion lines that we talk about, and price will find its way. So you could have got in early right there or right there, okay? It's a beautiful way and it works amazingly, okay? It's pretty much one of my favorite ways. So let's go back to the PowerPoint right there. So we're good with that. Number 2, trading lower time frames. So why does this matter? We're talking about maximizing their profit. So let me just draw a couple things, right? Let me move this over again. Let me draw a couple things. So let's just assume that price is going up and it's pulling back into a support area or a demand zone. Okay, so maybe it looked like this and this was a demand zone. And let's just say that you're looking at the daily time frame. So, and let's say that, well, I'll get to the other one in a minute, but it's coming into a major demand zone on a bigger time frame. So what we can do is we can drop it down. So let's just say that this was that line and this is a smaller time frame. So what we might be looking for is consolidation at this area on a smaller time frame, and then maybe a break of that area with maybe a pullback to go. So by dropping it down into a smaller time frame, number one, the reason why I like to do it is you have a smaller stop loss, right? Because if you drop it down to a smaller time frame, you don't need to risk as much. And like I like to trade the Forex market, so maybe instead of 100 pips or 50 pips, I can only risk 20. So what we do is, as it's coming into key areas, support, resistance, supply, and demand, then when it's coming into our area, we can drop it into a smaller time frame to just nail that entry. And let me kind of share with you really quickly one, and I'll talk about this in a minute, but y'all might be familiar with the hammer. Okay, the hammer. So maybe it's pulling back into support and you get a hammer or a pin bar. So on a smaller time frame, you know, I like to get in the entry at the 50% mark, so I want it to kind of pull back a little bit. But what I could do is, as it's pulling back into that area right here, let's assume that that's the line, we might get some sort of double bottom, and then I can just kind of wait for that pullback. So what I like to do is I like to, instead of just jumping in, actually wait, because of the smaller time frame, for a pattern to occur, so then I can have a smaller stop loss. So maybe instead of putting my stop loss way down here, because of this pattern, I can then put it into a, you know, smaller, closer area. Now, if we just go look at the chart, and again, this is just off the top, I'm kind of here. Let's just go here, and we'll look recently, okay? Let me just go to another pair. I'm just randomly picking something. And, okay, here's the 30-minute. Let's see if there's anything live. Okay, so right up here. So this is the daily in the middle and the 30-minute right here. And again, this was not planned. But for example, this is Wells Fargo. If I go up here, I can see this is a major resistance area. Now, let's kind of zoom in so y'all can see. It's almost that pin bar, but in reverse. Well, actually it is. This is a bearish pin bar at resistance, and this is real time. So what I can do, and again, by the time I get confirmation, it might be a big old red candle here, maybe trading below that low. Okay, but what I could do is I could recognize the candlestick pattern. In this particular case, it's a bearish pin bar, inverted hammer, shooting star, and then look over here to the 30-minute time frame. What do we got? We got a beautiful squeeze going on. So what I could do is I could say, okay, if I wanted to take this price action signal, instead of waiting for it to come down, which again, if I get in down here, well, let me get my little drawing items. If I get in down here, my stop loss is going to have to be higher up there, so I'm not maximizing as much profits. But here's the deal. If I jump in right up here at resistance, maybe I get that divergence that we were talking about a minute ago on the 30-minute chart. So I've got this channel with this squeeze, and then maybe I get a divergence that forms over here, and then I can jump into the downside anticipating that this is going to boom, reverse, fire to the downside, and this is going to roll over. So this is a perfect, and again, this was not planned, this is a perfect example of a bearish candlestick pattern at a key level, dropping it down into the smaller time frame, looking, I see this channel, maybe waiting for a divergence to form, and then jumping in with a tiny risk. And if I do that and it goes in my favor, that's going to help me maximize the profits big time. If it goes against me, it's a small loss. But here's the key. If I don't see some type of divergence over here, like look at that divergence, right? I need to see some type of divergence. If I don't see it, I'm not going to get in the trade. So the smaller time frame is critical. All right, oops, so let's go ahead and go back to the PowerPoint. All right, number 3, channel trading. Channel trading, and I got a couple things to talk about when it comes to channels. Now, again, some people like to trade channels, some people don't. Some of the ways that you can help increase your profits if you channel trade is, hey, measure the width of the channel, right? My mentors always told me you want that channel at least 10% wide. Okay, so what is a channel for those of you new? It's kind of, not kind of, you know, it's kind of equal lows, equal highs, like this, right? You might, whenever you see a squeeze on the chart, that's what I like to do. When I see a squeeze, I know it's going sideways, right? So then you can just go to the top, you can go to the low, inside that squeeze, measure that channel. Now, it doesn't have to be 10% in width. It doesn't have to be. I just like that guideline if I'm going to channel trade, because again, if I do that, it's going to help me maximize my profits. So if I get in down here, and again, you can drop into smaller time frames. All these work together, right? So you can drop into a smaller time frame just like I showed you here. So maybe it comes down here, forms a channel, and then you got a divergence like I just showed you down here. Now you can get in on a smaller time frame and have a wide, not a wider, but you get in the smaller time frame, your stop loss is closer. So you can put all these together. So if you do 10% wide, see the channels, utilize the smaller time frames, look for these divergences at these levels, and jump in. Okay? Now, zone to zone. So when I'm talking about zone to zone, I mean supply and demand zones. So you've got demand, meaning support, okay? And there's ways to identify that. Other than just support, you know, there are things that I like to use to really identify demand, because that's, you know, and again, heavy selling and heavy buying, like heavy, not just these tiny baby candlesticks, but zone to zone. So if I go look at a chart, let's go back and look at a chart, and let's do this. Let's just maximize this one for a second. And again, this was done on the fly, but let's go find, you know, here's one right here. And again, remember, it doesn't have to be 10%. So what you can do is you can say, okay, here's a squeeze. Here's that squeeze. That squeeze, if you go from the black squeeze, it pretty much started, you know, kind of about right there. And so it's funny, look how this line matched up. This line was pre-drawn. That's my expansion lines, because those are what? Those are areas or zones that we talked about a minute ago. The price can come back to. But anyway, check this out. So if I wanted, now, a channel, we really like to see 2 touches to the upside and 2 touches to the downside. But just, we're going, you know, on the fly here, guys. But we got a squeeze, so we got a channel. So whenever we got into the squeeze, you know, we can, in this particular case, the squeeze started here, we can draw our channel, like right there. And again, we want more touches, I get it. But in this particular case, when price comes down into this zone, we can drop in a smaller time frame and do it. Now, I also, and again, this was not planned, I also have a buy signal right there. Those 2 dots on the Forecast Pro are giving me a buy signal. Okay, they're in, we call them an intermediate confirmation, right? It's a buy signal. It pops up. And so when I get that, I can enter right there and then ride it up to the top. Because again, I'm trying to maximize my profit. So those are, you know, those are buys. So those little dots tell me. So let's see if we back it off, and let's just back it off again. Let's go to just in there, randomly going to pick one. Let's see if, wow, this was like an eternal squeeze. Okay, so look at this squeeze. Wow, this squeeze is never ending. So technically, I can draw a box around that entire period. Now, it kind of just chopped up and down, but it's in the squeeze, right? You can even do that. Actually, that's a good one right there as well, right? Right there. This one, UNP, squeeze a long time. So let's just go ahead and do that smaller one. So let's remove that big one for a minute. So right there, right? There we go. We got our 2 touches, give or take, right? Zones or areas. But anyway, demand, supply, support and resistance. We got the squeeze. So in this particular case, you know, you got the divergence leading up into it right there. So we got that divergence, and we can see this ahead of time coming. And then you can trade it. Now, this one didn't go all the way down, but it made it to the 50% mark. Now, in this particular case, you got a ready, aim, fire right there. You're not always going to get divergences, but lots of times, if you're trading that channel, when it comes into the demand zone or support area, again, look for divergences. Look for these add signals if you got it. If you guys got the Ready Aim Fire Pro, you can look for the Ready Aim Fire, right? Y'all know how to work that. If not, I got lots of videos on the Ready Aim Fire. And then just chain it back and forth, okay? So there you go, zone to zone. And then again, the bigger the channel, the more profits. Number 4, candlestick exits. So candlesticks exits help us to maximize our profits. Because what I like to do is when I'm in a trade and I'm in profit, I want to look for, obviously, you know, once it crosses a certain threshold, I like to look for certain candlestick patterns, right? So if I'm bullish, I look for shooting stars, bearish pin bars, you know, engulfings. When I see an inside bar structure, that really gets me fired up. Okay, I mean, as far as protecting profits. So you can use candlesticks to protect profits. Now, let's flip it. Since we're talking about, well, again, that's maximum. If you protect profits, you're going to maximize your profits. We can also use it for entry techniques, right? Because again, all we're talking about in this video is how can you keep more profits? Well, one way to keep more profits is when it's going in your favor, protect. But don't just move stop losses up to move it up. Look for certain candlestick patterns, bearish candlestick patterns. Or when prices, let's say, well, let's do an uptrend. An uptrend and it's pulling back into support. It's pulling back into support. Here, here, here. Okay, it says candlestick exits. So I should have just put candlesticks exits and entries, right? So candlestick exits obviously help you have more profits. So does entries, right? You get this pin bar right here at support, and again, drop it down into a smaller time frame, but you recognize the pin bar, just like we did a minute ago. You recognize the powerful price action signal. That's the heads up. Then you go to a smaller time frame to nail that entry. But the candlestick entry, again, you saw the candlestick pattern at a key level and dropped it down. So it works both ways. So let's just see really quickly on the chart. And again, I don't have anything planned. We're just kind of looking at it together. But we looked at that one a minute ago, but I don't remember what it was. But let's look right now. So let's say that you're in profit right now. UNP. I mean, UNP screaming. There's no candlestick pattern. There's no candlestick pattern right now that's going to help me with the exits. I mean, it's screaming to the upside. Now, what is there? There is a divergence. So knowing this divergence is here, I can move my stop off to underneath the low. But there's no candlestick pattern right there that could have helped us. So let's just kind of, again, just kind of picking anything here. Going back. Sorry, I've got to get rid of that drawn item. There we go. Just randomly, I'm just randomly picking one. Okay. Let's see if we could have find one. That's back. That's almost like the same one we looked at a minute ago. Okay, that's what? That's channeling, right? So you can just boom, 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 like a pinball, back and forth. I'm just randomly picking something. Okay. Right here, this was a bearish pin bar. Okay, this was a bearish pin bar. Now, it gapped up and produced a bearish pin bar. So you could have used that as a way to move up your stop loss. That's not really the best one, but and again, I might have to just go back in time in a minute. But, you know, kind of here's one. Well, no, that's not good. Let's kind of just go. I would like to get one that's screaming to the upside. That's channeling. Okay, right here. Cool. So let's just say that we're in Schwab right now. What kind of candle pattern is forming? Now, some would call this a bearish pin bar, a short-tailed bearish pin bar. A short-tailed bearish pin bar. You could also call this one a shooting star. Okay, a shooting star. So that's a bearish candle pattern. And right before that, we had, if you guys know that two candle pattern, that is a what? Evening star. So we had an evening star followed by a bearish pin bar, I would say that. So that's two very powerful candlestick patterns. So if I'm in profit, oh, by the way, not to mention, we have a divergence telling us it's slowing down. We do have a ready aim. So we had an aim fire over here, but that divergence is really giving me a clue right here. And we got this cluster. So you guys know when I teach this indicator, This dot is a cluster, which means all 3 time zones, short, intermediate, and micro, are extended. We're due for a snap back. So this indicator is telling me everything. So I'm for sure going to move my stop loss up. And if I move my stop loss up, what does that mean? I'm going to protect more profits. Okay? Simple as that. So that helps me there. So let's keep moving on. Candlestick exits. So again, there you go. Now, fake out, we didn't really see one. I mean, I can go back and look at it. I'll just show you what it is right now. I'll draw it. But a pin bar, we talked about the pin bar. So here is what a fake out looks like. So let's assume we're going up. So you got this candle, and let's say you've got this candle. That is an inside bar structure, right? So when it's at resistance, and I see this inside bar structure, now I'm alert, right? I'm alert. So a fake out kind of looks like this, where price pushes up through the day. People put in there, those that are trading that breakout, their buy stop orders, they're getting filled, and then institutions come in and spank them, right? And push it down. This is a fake out. If I see this, well, this is a bearish fake out. If I see this bearish fake out at resistance, you better believe I'm moving my stop loss up. And these people are getting stopped out. So kind of going down like this, let's say I see that mother bar, baby bar, inside bar. I'm like, okay, price goes down throughout the day, pushes back up, and does that. I mean, that's kind of ugly, but see this wick, it breaks below the low. That's a bullish fake out. So if I'm in a trade to the downside and I get a bullish fake out, I'm definitely moving my stop down, okay? I'm not going to go look for those on the charts. I teach those in my course, and I talk about those every day in the live coaching. But anyway, you guys get the point. Number 5, review your trades to improve your current strategy. Now, I'm not going to show anything on the chart on this one, but you know, we plan, do, review, and improve, right? Before improve comes review. How can you improve your strategy if you don't improve your, well, if you don't review your trades to improve your results? Now, one of the ways I like to do that is through a trading journal. Now, I think down below in my Options 101 course, and maybe even down below that, you know, I show you my trading journal, because I have a trading journal that I use to keep track of everything. It's dynamic. It costs me a lot of money to do, but you need a trading journal, okay? Make an Excel spreadsheet or whatever trading journal you have, but you got to review your trades, because here's the deal. If you review it, you can improve it. And if you improve it, what does that mean? You can protect more profit. You see what's working and what's not working. Okay, this is a kind of a common sense one, but believe it or not, a lot of traders, they neglect this. I'm like, it's too boring. I don't want to review my trades. You got to review your trades. Okay, if you review them, you can improve them, and if you improve them, you're gonna have more profits. Focus on limit orders rather than market orders. I really like this. You know, one of those things is market orders. I'm not gonna go into detail about the differences. Y'all probably know that, but let's just say this: if we're in a channel and price is coming down, I want to set a limit order right there, right? A limit order to pick it up. Again, this is one way. You can drop down into smaller time frames, like we talked about, and then when it breaks, you can set a limit order to pull back. But by setting a limit order, you're saying that this is the price that I want to get, okay, or better. I'm not going to chase. We use limit orders because we don't want to chase. Some traders, what they'll do is they'll wait till it comes down, and then when it bounces, they'll enter a market order. You can do that, obviously. There's no right or wrong way, but one way to increase your profits is to use limit orders rather than market orders. So if I see a bearish pin bar and I wanted to, you know, get in, one of the ways is I can get in it, a market order if it breaks, or I can set a limit order right there in the middle. Okay? Again, a limit order saying, I don't want to pay any more than this. That's big time. Because if you're not paying any more, then you're controlling your risk better, and if it works in your favor, ultimately, you make more money. So one of the ways, just really quick, that I like to do it is, as it's coming into a support or demand area, on that smaller time frame, look for that double bottom, break out, and then put a limit order to come back and test it. And then you can set that stop loss there, and that way if it does reverse, it goes and boom. So this is not a lesson on limit or market orders, but if you want to maximize your profits, get used to placing limit orders, not market orders. Again, price is pulling back. I can have a demand zone that I've identified. Maybe I got a divergence on that indicator, my Forecast Pro, Radiant Fire Pro, Squeeze Pro, whatever. I got a divergence, and I know this is a main area, so I can set a limit order right there. Okay, right there, so it comes down, boom. Now, there's pros and cons of everything we do. Sometimes if I set a limit order, I don't get filled, right? But again, we're trying to maximize profits. I'm just showing you my 7 favorite ways to do it. Limit orders are huge. Okay, I rarely, if not ever, I don't do market orders. Limit orders because I want my price. If I get my price, I'm going to have more profit. That's just the way it goes. So do me a favor, guys. Focus on limit orders in market instead of market orders. All right, number 7. Trade more markets, right? Don't just rely on the stock market. Don't just rely on the, options market, which options are derivatives of stocks. I get it. But that's one market, okay? The more markets you trade, the more profits you can make. Okay, what I like to teach my students is whenever the market's kind of out of whack or channeling and not doing too much, I like to go to the Forex market, right? The Forex market. That's another market. And so I trade that. And then I also look at the cryptocurrency market. So I'm trading the crypto market, the Forex market, and the options market. So the more markets we trade, the better off we can be. If I'm losing over here in the options market, maybe I'm winning in the Forex market. And maybe I'm winning in the crypto market. So the more markets that we trade can help maximize our profits. And also a little hint, guys, the Forex market leads, the majority of the time it leads the stock market. So if I'm trading the Forex market, it's going to give me a clue what's happening in the stock market. And you guys know, because I point this out in my videos all the time, and I even go live on Fridays, and I talk about this concept. So if you trade more markets, you diversify more over multiple different, again, I'm not saying multiple strategies, just different market. It can be the same strategy in a different market. As we talked about in the beginning, all the markets pretty much trade the same. Yes, they do. So trade more markets, 7 ways to maximize your profits. So it's not really a question, I just kind of put that up there. But again, 7 ways to maximize your profits. Get more or even improve, right? Number 1, practice on getting in early. We talked about multiple ways to do that. Divergences, supply and demand zones, okay? And again, you can even place those limit orders right here on those. Okay, we'll get that. Trade lower time frames. I use lower time frames all the time, right? For better entries. So I can nail the entries, and if you nail the entries, you make more money and you lose less when you do lose. Channel trading. I like to make sure those channels are wide enough, and I like to play the zones. I kind of combine everything, right? When I'm pulling back into support, divergences, look at the smaller time frame, boom. When it's a resistance, look at the divergence, smaller time frame, boom. And you can just bounce back and forth all day long. And the wider the channel, the more profit you can make, okay? And again, all this stuff is just helping you guys that want to improve on your profits to do it. Get good at candlestick entries. Pin bar, fake outs are some of my favorites. Some of my favorites. Those at key levels, key supply and demand zones. I see those candlesticks. They help me protect profits. 1, if I'm in profit, I don't lose as much, right? Which means, obviously, I got more. Or if I'm looking to get into a trade, because it's entries and exits. Coming into a key area, I'll recognize a candle pattern. And again, those 2 are my favorite. Bam, I get in the trade. And the better your entry into those, as well as exits, the more profit you make. Review your trades, improve your results. That's obvious. If you improve your results, you can only do that by actually documenting when you do. You're going to help your profits out. Focus on limit orders rather than market orders. Okay, we don't want to get taken advantage of with these market orders. These market makers screw us. So get filled at your price. Your price. Use limit orders. And then trade more markets. Trade more markets will help you, again, diversify what you do. It'll help give you clues into all the other markets, which in turn is going to help you make more profits Plus, if I'm doing great in the crypto market and I'm not doing so good in the Forex or options market, maybe that crypto market, and you guys know the trade crypto, it's making up for everything. Give me a thumbs up. Also, if you're interested in anything that I offer, trading plans, indicators, which they're down below, okay? The Forecast Pro is my indicator. Information is down below, but you're going to get my bonuses on top of those. And look down below because they're pretty dang sweet. You're